4 smart ways to invest in global stocks as a foreign investor in 2025. Global stock markets hit a record-high total market capitalization of over $120 trillion in early 2025. As of March 2025, the U.S. stock market accounted for approximately 50% of the global market capitalization, and 9 of the world's 10 largest publicly traded companies are U.S. companies. If you live outside North America or Europe and want to invest in global stocks but don't know how to start, this video is for you. As an international investor, you can invest in the U.S. and other global stock markets through different methods. Given the massive size of the U.S. stock market compared to other international markets, we will discuss U.S.-based investing in this video. However, the methods will be similar when investing in other countries. Whether you're a seasoned investor or just starting out, understanding these methods is crucial for making informed decisions. Here are 4 ways to start investing in U.S. stocks. 1. Open a brokerage account with a U.S.-based broker. Many U.S. brokers, such as Interactive Brokers, Charles Schwab, and TD Ameritrade, allow non-U.S. residents to open accounts. You will typically need to provide identification, like a passport, proof of address, and a tax identification number for U.S. tax purposes. 2. Use a local broker with U.S. market access. Some local financial institutions partner with international brokers to facilitate direct stock trading or offer access to U.S. markets through global depository receipts or GDRs. Check with brokers in your country to see if they provide this service. 3. Invest in U.S.-listed exchange-traded funds or ETFs or American Depository Receipts known as ADRs. These are funds and instruments that allow you to invest in U.S. stocks indirectly, and could be available through brokers in your home country. 4. Online investment platforms. Some digital investment platforms like eToro and others often cater to international investors, providing user-friendly ways to access U.S. and international stocks. Check to see if such platforms are available in your country. Finally, here are 2 things to note. First, comply with tax regulations. Non-U.S. investors are subject to U.S. tax laws, including withholding taxes on dividends. Ensure you understand the tax implications and consider consulting a tax advisor. Second, currency exchange. Currency exchange rates and fees may impact your investment returns when converting between your local currency and U.S. dollars. To discover a smart and simple strategy to find and buy excellent global stocks today, check out our Smart Investing for Beginners course, using the link in the description section of this video, or at courses.joskedconsulting.com.